All right, here we go. Three, two, one. How you doing, friends? Ernie, and this is the 0 Days to Expiration podcast, episode number 77. That's right. There have been 76 prior episodes to this one. No, wait a minute. There have been 75 episodes prior to this. There is still that missing episode number 70 that I have no idea where it went. It's not on my hard drive here. It's not in YouTube land. It just disappeared. It's not on the pod. I just don't know what happened to number 70. We'll have to dig it up someday and then just slip it in. It'll be a new tranche, which happens to be the topic for today. What is a tranche? How do I use a tranche in 0DTE or trading in general? What is a tranche? It sounds very French, which it is derived from a French word that means a part of something. In this particular instance, tranche is a part of a trade or a part of a position. So when you take positions in a trade, you can say, let's back up a little bit. Let's suppose that you have lots of money, big account, and you've decided that your position size is about maybe 1 or 2% of the size of your total capital trading that's available. And maybe you have $100,000, so let's say it's 1%. That means that you have $1,000 to put up for any one single trade. All right? Now that's not, I guess you could call that a tranche, but that $1,000 for the type of trades that we put on here at 0DTE would be way bigger than what we actually do because our risk is super small. However, we go after a very large profit. It's an asymmetrical trade. So our position sizes really never cost or risk us much more than, say, $50 or $100. What that means is that if you had a $100,000 account, you could theoretically put on, if 1% is your max size, 10 of these positions. Each one of those positions, 1/10 of your total position size, we would call that a tranche. It is a part of the bigger position. All right? So that's what a tranche is. It's a part of. So that's how we refer to it here in 0DTE land. I'm sorry, 0-DTE.com. Make sure you include that dash because without the dash, you have trash. Seriously, 0-DTE.com is where you go to sign up for a trial. That's 0-DTE.com/try. Try it out for 4 weeks. You also can participate in this fantastic strategies, methods, and process. It's really a system that we do here. It's an educational service where we teach you how to trade the last day of expiration on the S&P. We trade the SPX as well as the E-mini futures, not so much the SPY. Now getting back to tranches. A tranche in our world is a part of a position. So why would you want to do that? Because we trade with asymmetric positions. In other words, we trade with very little risk, with the opportunity to make huge potential profit. Typically, our trades that we put on, like today, had a risk to reward of about 1 to 8. That's about average. Some of our trades can go as high as 1 to 10, 1 to 15, even 1 to 20. The minimum size trade that we would ever accept is 1 to 5. If we can't get a 1 to 5 risk to reward trade, we simply don't take it. All right, so let's assume that then we have this 1 to 8 risk to reward. We put it on, it's about $100, $125 to us with the potential of making about $800 or $900. I know that sounds crazy, but that's what we do. We average about 150 to 250% of the risk that we put on per trade. Sometimes we pin the trade, like this week, we pinned a trade, huge win, Today, I think we're also going to possibly pin a trade, another huge win, where we put on just micro amounts of money to make $100, $200 to make $1,000 or more. That's exactly what happened this week. I think the dogs have discovered that somebody has shown up here, maybe a delivery person. So let's get back to tranches. Let's say that you have 10 possible tranches that you could put on for that trade because of the size of your account. Do you just push all your tranches in? If you did, what good would it be to refer to them as tranches? Now, what we do, because we have this asymmetry, everything that we're about is about using the least amount of money possible to get the maximum amount of reward. And the reason why we do that is, well, really, we're about efficiency. We're also about, what it really comes down to is this. We want to have the kind of environment, a trading environment or a trading attitude where we don't have to be sweating any one position. Why should we? When our overall return for the amount of money that we put to work is literally 1/10 to 1/20th what the other 0 DTE traders are doing. We already know that we have a strong edge in selling premium on the last day of expiration, and also a huge edge in our analytical capabilities using volume profile. And now we can get another edge, and this is a more ethereal or subjective edge, I guess. This other edge that we have is the ability to go into a trade and never have to really worry about our position. So we can put on a 1/10 position size, knowing that it's really not going to hurt us if we lose, even if we go to a full position size, which 10 times that, which again isn't going to really hurt us. But now we have that opportunity. So what we do is we start with, if you have a larger account, a strategy on how we're going to apply these tranches to any trade. Not only for opening a trade, but also for managing the trade during the course of that trade and also exiting. Kind of like scaling in, scaling out, but it gives you that opportunity. Now, of course, with a smaller account, you have fewer of these tranches to deal with, so it's proportional to the size of your account. For very small accounts, with the 0 DTE, we can easily trade with, say, a $2,000 account. You might only use one tranche, and that's all well and good. As you grow up and get larger or bigger wins and grow your account, then you graduate to more positions and you have more flexibility. But some of the things that you might want to do is put an initial position in, and let's say that the trade goes against you a little bit. Your analysis is still good, so your hypothesis for the trade is still valid, but now you've gotten a better position or a better price for the initial trade, and you still have enough tranches to add to get up to what you would consider your max position size, but you never really even have to go there. We like to stay small. We find that staying small helps us in a couple of ways. One is that overall it gives us a better return. And that's because I guess the biggest reason is that we're never worried about a trade. Our anxiety level is like down here, way down here somewhere. Where every other 0 DTE traders, their anxiety level from the very outset is way up here, way up there. All right. What was that movie with Tom Cruise, Night and Day, and Cameron Diaz, where he says, your chances of living with me, here. Without me, here. With, here. Without, here. 0 DTE, here. Without, 0 dash DTE, here. Or dash, here. No dash, here. Dash, here. No dash, here. So we go into these trades with really zero anxiety. And the benefit or the edge that we get from that is the ability to have a clear mind. No anxiety means that you can make better decisions. And that's what it's really all about. By splitting these things up into tranches, we can go into it very small. If we get a better price and we can actually reduce our cost basis and increase that asymmetric trade to something even bigger, which is almost inconceivable compared to other zero DTE practitioners, we can do that. So it's even better. So tranches make us even happier and more calm and collected and cool and ready to make quality decisions under zero duress. That is the difference here with zero dash DTE. I'll just say it again. That is the difference. Dash here, no dash there. So besides being able to improve your position, improve your cost basis, you could also have more sophisticated entry strategies. Perhaps you have various levels where you think that you might add to this or layer different trades on here that might have different targets in mind, thereby increasing your ability to potentially trade or profit. Or maybe you decide that you're going to trade both markets, the index and the E-minis, or the E-mini minis, micros, or the E-minis, or whatever your heart desires. It doesn't really matter. But it will allow you greater flexibility and the ability to create more sophisticated entry strategies or to scale in. You could also get to a point where you realize, because of a changing market environment, that you might even want to add more trades as the trade improves. You could do that as well. Now, another strategy that you could use is to go for what we call the free ride. So let's say that you've built it up to 4 or 5 tranches, half of your position size, or maybe 3/4 of your position size. And then you find at one point during the trade that you're up 100% of the risk that you've put on. So you decide that, okay, I'm going to take 3/4 or maybe 2/3 of the positions that or 2/3 of the tranches off. And by doing that, I've locked in or I've realized that profit, and I've guaranteed that no matter what happens with the remaining tranches, that I'm going to be a winner that day. And what I could do is let that go, and now my risk has been reduced to 0, and I have the potential for that remaining tranche to pin or get better profit. And again, that adds to this kind of calmness, this idea that we're in complete control, that we can make sound and rash decisions like this. We could even take an additional trade. Whatever it is, we're not sweating our positions. We have flexibility on what we can do, getting in, getting out, scaling in, scaling out for purpose, scaling out to get that free ride. Once we get the free ride, that's cool. Now, we know that about 10 to 15% of our trades will actually pin. Now, we had a pin trade this week. We had one last week as well. All right, 2 pin trades in a week. Now, that's a little bit above our average. Our average is like 10 to 15%. But when we start getting into environments like this, where volatility is elevated, liquidity is coming back, we tend to get a much higher win rate, and we tend to hit those pin trades more often. And it raises our average expected return on our risk from, say, 150% of our risk to 200, 300% of our risk. And that's an enviable place to be. Huge positive outcome for our trading. And allowing us to take advantage or reaching for other possibilities like a pin trade. Now, we talk about pin trades. If you go back to some previous episodes, I talk about pinning the tail on the donkey. We love to pin the tail on the donkey. And that might be another one of those trades today. It would be wonderful if we had 2 pin trades in 1 week. That would be outrageous, where we risk, say, a couple $100 to make $1,000 or more, depending on where it pinned. So again, tranches are a part of something. When you have a part of something, or you have multiple things, then you have more options. Not being a pun there or anything, but you have more options in order to facilitate a more sophisticated entry strategy as well as a management strategy. And then also, we didn't really talk about exit strategies. And we'll talk about that someday in a separate topic. All right. Let's see. Are there any questions or comments in the peanut gallery? Let's see. I recognize some of our members here. Yes, we got the sound back. Peter's saying superb trade today with the it was the unbalanced butterfly at the open. And a very exciting day. That's great. So no questions. That's good. Yeah, today was a very good day. Actually put the trade on, called the trade last night, and then reiterated it this morning. The market right now is in turmoil. Let's face it. Inflation is going to roll over us heavy and hard. And it seems that the Federal Reserve is almost oblivious to this, or trying to use their narrative powers to, gloss over it or convince people what they're seeing is something different than what they're actually seeing. Now, what I'm fearful of is that the Federal Reserve is going to take the 2 or 3 rate hikes that they originally proposed and turn it into 6 or 7 or 10, and then totally overbake the whole process, which is normally what they do. Anything that they do, they either underdo it or overdo it and cause these huge swings. And I believe what they're going to do is they're going to drive us into another recession. So from a zero DTE point of view, that's really not a big deal. As a matter of fact, it provides an environment which is actually conducive to everything that we do. And we like volatility. We love volatility. Now, obviously, when you get too much, you have to sort of sit back and wait for it to come to you. But a lot of volatility is our kryptonite. Is that right? That's the wrong way to say it. Kryptonite is bad, right? What would be a positive metal that would be good for us, like gold or silver or palladium? Yeah, palladium. Palladium is cool. Rhodium is off the charts. But anyways, we do that too here. We stack bullion, gold, silver, rare coins. That's all part of our wealth building process too, besides going into these trades and using a little bit of cash to make a lot of bit of money. All doing it with tranches. So anyways, I want to thank you for joining me today. I have a little something in my throat. I don't know if you noticed this, but I don't have my water with me. Where is my water? So I'll have to cut it short. What I want to say is thank you very much for joining us. I hope you all have a great weekend. This has been another fantastic zero-DTE week. Again, if you want to try this out, we have a 4-week trial. Go to zero-dte.com/try. You can try out the service for 4 weeks. And in that 4 weeks, you'll be treated just like every other member of the service. And that includes world-class support, exposure to our entire strategy, methods, and process. You'll come out of that 4 weeks, even if you don't go take on the service, you'll come out of it with an excellent education. And it doesn't matter if you're a newbie to options or you're a pro. You'll get huge returns in terms of the benefit of what you'll learn and possibly real returns. As a matter of fact, a lot of our trial members make enough during the trial to pay for literally years of the service. So give it a shot. All right. Thank you very much. All I can say to you is I hope you have a wonderful Valentine's Day weekend with your loved one, and peace to you all. That's it. It's a wrap. Thank you, Mr. Monkey. All right. Where is that off button? Why I always have trouble finding this thing? So